Good afternoon. Welcome to yet another amazing event by CJEP. My name is Robert Farrokhnia. I am professor and researcher at Columbia Business School and Columbia Engineering, as well as sit on the Knight Badgett board at the School of Journalism. I'm delighted to welcome you to our event today, organized by Center for Japanese Economy and Business, which is a fantastic story, in my humble opinion, about how to bootstrap a startup as a Japanese new venture in 5 years from 0 to 100 million in valuations. So before we get to the story, for those of you who are new to us and CJEP, I want to give you a quick introduction. So CJEP, or Center for Japanese Economy and Business, was established in 1986. And for the past over 35 years plus, has been promoting knowledge and understanding of Japan's economy and business systems in the grander international context. And they do so through many programs and events, including this one, a variety of webinars, symposium, and a marquee event in annual conference in Japan. So please, in case you're new to CJEP, check them out. Subscribe so you can attend more of these conferences with amazing food that's being delivered, and hope you're enjoying it. And in regard to today's program, we are delighted to have Danny Taing with us, who has a really interesting story about his company. It's not often we have entrepreneurial ventures from Japan in general, let alone having them present to us at Columbia. He's the son of Cambodian Chinese refugees who was born in the US, grew up in New Jersey, attended Stanford for his undergraduate and master's degree, something you're not going to hold against you. And although he made up for it by coming to Columbia for his post-bac studies in computer science. And then he worked at Rakuten in Japan, developed a love for Japanese culture and food and everything else Japanese, and eventually started Bokksu, the company that we'll present to you today. So we're excited to hear his life story as well as the story of the company, and then so the game plan is for Danny to give us an overview of the company, and then I'll join back for a Q&A with you all, and we have a fun raffle also organized, so hopefully you all have your tickets. So without further ado, please give a warm welcome to Danny, and the floor is yours.
Thank you. It's good to meet you all. So that was a really lovely intro that helped save me a little bit of time in my kind of story and stuff. But so as you mentioned, I'm Danny Taing, I'm the founder and CEO of Bokksu. My brief backstory, I'll make it even briefer since it was introduced, is that born in New York, raised in Jersey, went to Stanford, studied psychology and Japanese. After I graduated, I actually worked at Google as my first job in Mountain View, doing digital ads marketing and stuff. But after just about a year, I ended up quitting and moving to Tokyo. It was several reasons. One, I really wanted to kind of challenge myself. I was young, I was hungry, I wanted to not have these golden handcuffs in the Bay Area, which is a nice thing, but I wanted to see what else was out there in the world too. I was really passionate about Japanese language, food, and culture, which is pretty obvious now, but at that time I kind of wanted to move to Tokyo and just eat Japanese food every day, like what you guys are doing right now. And I got into a university there called Waseda, which was really awesome, and went and studied further there. After halfway through that though, I loved Japan so much that I didn't want to move back to the States, so I did kind of the job hunting thing in Japan. It's called Shushoku Katsudo, where I'd wear the Shinjin suit and everything with the really black and austere white shirt, and did the full interview process. And fortunately got an offer from Rakuten. This is in 2010, when they were first doing a lot of global expansion. They called it globalization, Englishization, kind of weird words they kind of made up. But it was a really good opportunity for me to kind of join this company as one of the first bilingual foreigners, to kind of help them do a lot of business development, business strategy, and global expansion. And so that was a really good experience. Really, really tough. I'm sure some of you are pretty familiar with Japanese business culture. It was not only very hierarchical, but it was very top down, and you can never really talk back and offer your opinion. But I knew this going into it. I'd studied it a little bit in college, and I was like, I want to get paid to be a salaryman and experience what it's like to be beaten down for like 2 years. And because I knew it wasn't going to be forever, fortunately. And but it ended up like I learned a lot. I got business fluent in Japanese. Even learned Keigo and stuff, which I've mostly forgotten now. But at the time, I was pretty fluent at it, and got to travel throughout the country. Got to eat a lot of amazing Japanese food and snacks, and in total lived in 4 years in Japan. Also in my last year there, got to meet who's now my husband during that time there. So it ended up working out really well that I lived there for so long. Moved back to New York around 9 years ago now. Came back to school at Columbia to study computer science because you guys have this really cool post-bac program, which not many schools have. And like my goal was to maybe become like a software engineer at a tech company or something. I had no plans to do entrepreneurship. But then I kind of stumbled into it halfway through, ended up meeting a friend who was like, let's just do a company together. Let's like drop out of this program. And I was like, okay, let's do it. Why not? And then that ended up not working out and pivoted like several times. And then I came up with the idea of Bokksu in like late 2015. And I got really excited about it because I was like, okay, this is something I'm actually passionate about. The other ideas they were just random marketplaces we were creating, like Uber for X or Airbnb for X at that time. It was hot in 2015. And but like this I cared about, but my co-founder at that time was not so into it. And so he actually thought it was kind of a dumb idea. And I was like, okay, you know what? Then I'm just going to do this on my own. So we kind of amicably divorced. And I started Bokksu as a solo bootstrap founder in November 2015, kind of like packing boxes in my living room. But what ended up happening was because of this kind of almost seemingly random meandering life journey, and at that point in my late 20s, my parents were like, what are you doing with your life? Like you keep quitting your job, you keep learning different things every couple of years. But for me, I was like, I'm just kind of following my passions. I just kind of wanted to do this. I wanted to try that. I wanted to learn this. And it ended up working out because I had all the skills I needed to start Bokksu. I did the website myself because I knew some CS. I did the marketing myself because I'd worked at Google and stuff. And I knew Japanese business culture pretty well. So I was able to kind of source the products and things like that. And I had friends in Tokyo that helped me out early on. Because sourcing, as you can imagine, was one of the early difficulties of this business is how do you get these authentic Japan exclusive products in an efficient, cost-efficient way to American consumers and beyond. And so that was pretty tough. But thanks to kind of my life skills and experiences, I kind of had everything I needed and did it myself, launched in early 2016 to about like 40 subscribers, most of which were kind of friends supporting me. By launch, I mean, I just like posted on my Facebook back when people used Facebook at that time. And because I didn't have any budget to do marketing or anything like that. But kind of flash forward to kind of today, I'll kind of talk about some of our numbers a little bit. So to kind of give some context about this deck, this was actually my Series A deck. So I bootstrapped the company for about 5 years. And then last year, when we reached over 20 million in revenue, we also hit profitability, which is a pretty rare thing to do for a D2C company in the first 5 years. I went out and raised my first equity fundraising round, and it was a Series A. So I skipped right over seed. And this was kind of the deck I used. So I can kind of talk about some of the stuff here. But so this was kind of a snapshot of our numbers last year. We did about 23 million in revenue. We've shipped over 1 million boxes globally, had about 40,000 active subscribers, and we shipped directly from Japan to about 100 countries around the world. So if that sounds kind of crazy, it's because that took like many, many years of reiteration and supply chain improvements to like get it to that point. Came a long way from like me packing boxes in my living room in New York City. And something that we point out quite a lot because investors get confused is that actually the vast majority of our subscribers are not Asian. That's kind of one of the reasons why the mission and purpose is to bridge cultures by kind of bringing Japan to people, is that if we're just kind of selling Asian things to Asian people, I mean, that's good, but it's not that impactful. Like my whole thing is that I want non-Asians to try these awesome Asian snacks and foods and feel a lot closer kind of to the product and culture. And one of the reasons that came about was because when I moved back, kind of the founding idea, right? Like people ask this all the time, like, why'd you start Bokksu? It was kind of twofold. Like one on a slightly more kind of surface level reason was that I moved back and I lost access to all the great snacks and food there. Like there's some in New York and America, but it's like generally Pocky, Haichu, things like that, which are fine, which are great. But some of the snacks we have are like centuries old family business snack makers that have never left Japan, speak English, or ever sold their stuff outside of the country before. And so that type of product was almost impossible to get, even in New York City. And the kind of deeper level reason for why I started Bokksu was after having lived in Asia for 4 years, I moved back and I kind of had this reverse culture shock where I forgot, because I'd lived there for so long, that America's kind of racist towards POCs, including Asians. And it was like this thing where people just kept dropping these comments that were something I just wasn't used to. Like people thought that Japan was just full of like geishas and sushi and Pokemon. Like I had friends that thought that Japanese people ate sushi every day. And I was like, that is not a thing that happens. And so I was like, let me do something to change that. Let me start a company where, like I said, I'm kind of shipping these curated boxes where we're kind of the tastemakers and experts, and then people eat it and they love it, and then they hopefully feel a little closer to that culture. So kind of the big problem we're solving is that, as some of you may or may not know, but Japanese food is actually like exploding worldwide and in America. Japanese restaurants are the fastest opening restaurants in the country. And it's not just like sushi anymore. There's like ramen and tonkatsu and nabe and all these different types of foods. And so there's all this demand, but there hasn't been a lot of good ways to kind of connect it directly to Japan without first kind of lots of different intermediaries. And so we're kind of just showing some of these dynamics. More and more people are watching anime. More and more people are kind of learning Japanese. It's kind of becoming a bigger and bigger market type of situation. So kind of joining this rising tide of culture and demand. Having said that though, like it might seem obvious to some people now, but when I first started this company 7 years ago, lots of people were like, what is this super niche business? And I'm like, it's not that niche. Like people love Japanese food. And yeah, so the solution's kind of what you guys are probably familiar with, you've heard of, is our snack subscription boxes are kind of a main product. We have these direct relationships with well over 100 of these family businesses throughout Japan. And that took also many, many years to develop a lot of that. As a lot of Japanese businesses are sometimes risk adverse or like a little bit private, again, especially working with like a company they've never heard of that's based in America, that didn't even have a Japanese entity at that time. And so there was a lot of trust building that had to happen. It was like paying like in advance, buying smaller quantities, and then ramping that up little by little, and how kind of building that trust with our makers was super duper important. And that was kind of one of the big ways we have this competitive moat where like they only work with us. They don't work with any of our competitors. How the box works, so I have an example of right here. So this is also what people could win in the raffle later, I think. So get excited for this. Our latest box, the theme is Autumn Koyo, which is kind of like fall colors, is that it comes with this, of course, like a box of snacks and always a tea pairing, because Japanese people always eat their snacks with tea. But most importantly is what we call this culture guide that we design ourselves every single month. It's like a lot of work. We have an in-house photography team, but we're trying to really elevate all these products in a way that it kind of deserves the stage that it has. And so this is what kind of ties it all together, is that we curate all of our boxes really tightly around a theme. And so every month you get to learn about Japan while snacking and eating. And then like a lot of people keep this guide and it shows like where in Japan these snacks are from. And a lot of people like plan to like travel to Japan and visit some of these places where some of their favorite snacks are from. So this is what we launched with in 2016. And then in early 2018, we launched what's now called Bokksu Boutique, which is an e-commerce store from Japan that ships globally. And we expanded to not just have kind of snacks that are in the box, so people can now repeat purchase things that they get in the box, but we also have expanded to have like kitchenware, like fancy Japanese knives, curated bundles, like premium ramens, things that wouldn't go in our snack box, but now you can just buy it, and these are all Japan exclusive items. So this is kind of an example of showing how many kind of different suppliers and vendors we work with all throughout Japan, from Hokkaido to Kyushu to Okinawa. I visited a good amount of them. It's always been really fun because I go meet them and they all get very confused by me. They're like this gaikokujin that speaks Japanese, has earrings, and has like female managers around him kind of thing. It's like a very different vibe because it's a very male-dominated space, traditional snacks in Japan. And a lot of my employees are like, especially the manager level, are like women. And it's been really cool to kind of have that culture clash a little bit with Japan. But because we're the customer and we're helping their business, they like us a lot, and they like going out drinking with me. Like I actually love Nomikais now. I used to hate it when I was at Rakuten, but it's really fun when the vendor pays for all your drinks. But so yeah, we have actually it's 9 full-time employees in Tokyo now, and we have 2 third-party logistics companies we work with in Osaka. So this is kind of how our supply chain logistics works. So kind of what was a big deal for a lot of our investors, and since we can talk some nuts and bolts of fundraising if people want to know about it, is that by the time I went out for this $20+ million Series A last year, I'd only raised 2 million in like kind of safes and smaller like kind of rounds. They weren't priced equity rounds, and I'd raised only 2 to get to over 20 million in revenue, as well as we hit like EBITDA profitability, which was a really big deal. So then we had unlimited runway, or as I like to say, we just have like a real business that we didn't need the funding, but it was something that could help accelerate our growth quite a lot. And that resonated really strongly with a lot of the investors. Just kind of some of the quotes from our kind of press we've gotten. We have a good amount of social media followers. Some of the demographics of our customer base, it's kind of shifted a little bit since then, but roughly speaking, we have actually even higher amount of Caucasian, but like this is kind of what we're seeing in our customers. And we have pretty strong unit economics. I don't have to get into the biggest thing to note here is that our average customer life is 9 months, which is pretty rare in the subscription box world. Usually it's around 3 to 6 months, but we have a really unique product that changes every single month. And so that kind of makes it really exciting for people. Strong LTV to CAC and kind of a future vision. I don't have to get into the whole like kind of thing about it all, but basically that's the company in a nutshell. And what made it really fun is that I am every day doing something that I love. It sounds kind of cheesy, like almost the thing founders would all say, but like my job changes every single month, I would say. Like my role as the founder CEO, and that's what I like. Like I don't like doing the same thing every day. And so the fact that I get to like wake up, work on exciting projects. We have like 3 or 4 different expansions in the pipeline coming that we're really thrilled about. And I get to like work with really good people that are also really passionate about Japanese culture and food and kind of sharing Asian stories. Makes it really fun. And I get to talk to people like you guys here too, which is really nice. Cool. Thank you for listening.
Awesome. Thank you, Danny. Much appreciated. So, will you join me in having more of a Q&A?
Sure.
So I'll abuse my privilege as the moderator. I'll ask a few questions myself, and then we open it up to you. Just please raise your hand. We have our team members going to pass around microphones, so your question can be heard by everybody, and we have a moderator fireside chat with Danny. Let me turn this on. Hopefully yours works. Mine, I don't think does. There it is. Okay, perfect. Awesome. Thank you so much for that introduction and sharing with us the story. A number of questions I wanted to ask you first, and that is, I interact a lot with startups and venture funds both in New York and Silicon Valley. There is this bit of a misconception that if you're in a software business, you're in a totally different domain, whereas you are a software business and you have the product, actual physical product attached to it as well. Managing supply chain in Japan and delivering to 100+ countries is no small feat. So can you share with us how you were able to bootstrap all this, infrastructure first, having only raised a little bit of money compared to what others might assume in terms of resources you have to scale?
Yeah, it's a great question. So it's actually one of the reasons that I started the company as a subscription box was because that allows you to be a lot more lean about your budget and finances. Because like if you run a normal e-commerce store company, let's say, you might have like 100 SKUs, you might have to have like a lot of different inventory and you wait for orders to come in. But if you do a subscription box, you can forecast how many boxes you can sell that month and then kind of order appropriately. So you always have just as needed inventory, which is a huge deal. Inventory is how you live and die as a business if you have products. And so that allowed me to stay really lean early on and to keep bootstrapping it that way. It also helped that like we kept growing. The first few years of the business, there was like nonstop month over month and year over year growth. So that allowed me to like unlock some cash flow through that, either through debt financing or finally, as we kind of got closer with our vendors, we were able to negotiate credit terms with them, which also unlocked it quite a lot. And it helps that we had real revenue and real margin from the beginning. Like I priced it out so that we would have at least 30 to 35% gross margins, which is kind of what you need as a minimum to run a healthy business. So it's different from software where they're essentially not generating revenue for years and years and years, so they need to fundraise to hire people to develop this product to sell.
Great. Now, during the pandemic, we saw a bit of a whiplash in terms of lots of people being at home, they're discovering new things, so revenue growth, more demand. but then you hit the supply chain challenges as well. So how do you manage that? How do you ensure you don't grow yourself, you don't grow the company bankrupt in a way, because you need working capital. It's a physical thing, so there's a cost to your goods. How do you manage that in midst of all this crises that are coming one after the other?
Yeah, I mean, COVID was very, very tough, not gonna lie. It was like when COVID first happened, I was actually in the middle of that second like small safe fundraise round, that like second $1 million tranche. And every investor that committed like pulled out. This was like March 2020, everybody was freaking out, nobody knew what was gonna happen. And so that was already tough because we needed some cash to be able to kind of operate the business, as you mentioned, because we paid for a lot of things up front at that time. And so that was tough. So we had to like take out some more like revenue-based financing or kind of working capital loans and things like that. But what was really cool was that all of a sudden we started seeing this increased demand for our product because people were stuck at home. They couldn't move or travel, and they were tired of eating canned beans, I think, at that time. So they wanted to try something new. And so all of a sudden we saw this spike in orders. But then global shipping kind of shut down in April 2020, where there were no planes in the sky, and we ship everything by air because we have like relatively fresh snacks. And that was a big challenge to like navigate through how do we find alternative shipping routes when we had been using this one method for like 4 years.
Can you share like a war story? How share some lessons,
Yeah.
especially with entrepreneurs in class?
So like at that time, for like more transparency, we were using like 100% of our shipments through Japan Post. It was the most cost efficient. It allowed us to kind of ship through the Postal Service network. But then in April 2020, Japan Post suspended shipping to about 200 countries around the world, including the US. And when I got that news, I still remember it to this day. It was like April 22nd, 2020. I thought my whole business was over. I thought like all this blood, sweat, and tears I put in this company was gonna just die because we couldn't ship anymore. But fortunately, I took a shot of whiskey, and then I reached out to my whole network, and I like hit up everybody in logistics, 3PLs, distribution, freight forwarders, carriers, to like ask for help. Like, how can I keep shipping our boxes out of Japan? There must be a way. And after 2+ weeks of doing that, I found one partner in America, like a third-party logistics company, that can do this roundabout solution that still cost more, but at least allowed us to keep shipping. And that is essentially what tripled our growth from 2020 to 2021, is we became one of the only companies that could ship in a cost-efficient way to America.
Are you sure it was a shot of whiskey and not sake?
Sake is not strong enough for what I needed at that time.
Then I want to ask you another question in regard to the actual product. The product requires a lot of curation.
Yeah.
It's impressive to see the lifetime of engagement of a customer, which is more than twice than average. But that requires a lot of thought and curation. So how do you go about creating that sense of uniqueness and newness, but at the same token, kind of continuity amongst each box month after month?
Oh, great question. That has evolved a lot over time. Like in the very beginning of the company, when it was just me, I only had so I curated everything myself and sourced everything. So there's about 20 items in the box, but at that time we only had like 6 unique products, and so I just had multiples of each, and that was like not good enough. Because then it looks very not full if there's so many repeat things in the box. But it just took a lot of work to curate so many different unique products. But as our team has grown and our expertise and relationships has, nowadays the way we do it is there's about 14 to 16 unique products every month, always curated around a different theme. It's a totally new curation, and we almost never repeat any of our snacks. Fortunately, this works out because in Japan, they release new products all the time. The product development cycle is crazy there. As some of you might know, there's over 300 flavors of Japanese Kit Kats, and that's just like one example of how many new flavors they're constantly pumping out for even the normal snacks too. And so because of that, we always put in new stuff with new theme curation, and that like excites customers every time because it's a new experience.
In regard to, okay, let me ask you a follow-up question, and then my next question, and that is, to what extent are you using machines in terms of data and machine learning to determine if what product has been most popular or what has generated the most buzz versus that human touch that people go and figure out what product to be in the box depending on the theme and so on?
Yeah, so we, in the beginning it was all human because we didn't have as much data and we didn't have the right people to kind of analyze the data. But as time has gone on, we sent out a survey every single month, kind of getting people to rank the snacks that they liked or didn't like in the curation. And now we have like a whole snack ratings dashboard that we built ourselves internally. And so it's a combination of the snacks rating dashboard. We also then cross-reference it with our sales data in Bokksu Boutique of which snacks sold well or not. And then we either bring back a really popular snack or we just use that same snack but a different flavor or a different type of style. And so that is one of the big ways we now curate is based off this data so that we have a much higher probability of the box doing well if it all has like, best hits in the box. On top of that though, there's still a huge human element. Like we curate based on theme, a color. Every month it's a color scheme as well, because what we want is people to open the box and just be wowed by this experience. And so if it's fall, we have like reds and greens. If it's cherry blossom season, it's all pink, things like that. And that's like a really fun experience. And so that's a very human thing to do. We also taste all the snacks. Actually, we just had a snack tasting yesterday. Once a month, we ship snacks over to our New York office. The whole team tastes, and we submit our kind of responses in a Google form. My responses are more weighted, obviously. And I still like final taste test everything that goes in the box. And so if it doesn't taste good, it like doesn't go in. And so I've tasted like thousands of snacks by now.
If, in case you need any volunteers for tasting, I'm available. The other question I wanted to ask you is about product market fit. It's at the end of the day, it's what makes a company succeed or fail. And it requires pivoting, requires constant refinement, right? So tell us about the journey. It started with this vision, but then the journey changed that vision as you responded to the marketplace. And you also alluded to pricing. And for any new startup, pricing obviously is very important and eventually allowed you to grow the company the way you did. So tell us about your thinking that went into fine-tuning the product market fit, ensuring that you can how did you get the first customers? And how could you ensure that you're happy and then you can grow? So take us through that journey. Any lessons learned would be great to hear.
Yeah, so as I mentioned before, I'm a first-time founder, and so and my background is in like marketing and like kind of biz dev and stuff. So I had to Google most of this. I didn't even know what a PL was or gross margins. I'm shameful to say this in front of CBS students, but like I know what it is now after 7 years running this company. But like so, I actually had to learn a lot of that and what was important. But I actually did it in my case from a bottoms-up model, mainly because I just had to have margin in order to run this as a real business. And so I just took kind of what I needed in terms of COGS, shipping, and then kind of processing fees, and then what was left as a gross margin, and that's how I priced my product. I, of course, also looked at what was out there in the space already and saw how it compared, and then I picked that. But I always knew that I could change that later. Like, you don't have to freak out so much about pricing. It's not really going to like destroy you if you come out with the wrong price. The general advice is to actually come out with a higher price, see how the markets react, and then you can always adjust accordingly if you need to. And that's actually what we're doing now with a new box we're releasing next year that we're pretty excited about. It's our first new subscription box. Well, if you sign up for the mailing list, you'll hear about it. But yeah, and so like we're pricing it high, especially with all the inflation going on, and then we can step it back if we get economies of scale.
And the first customers, how did you get your first customers given the fact you didn't have a big budget to do marketing and outreach and so on?
Yeah, the first year or so was so-called like guerrilla marketing. It was very scrappy, as many like cheap ways to market as possible. And at that time, like Facebook, I wish I had money to do Facebook ads because in 2016, Facebook ads were much cheaper. Now it's kind of a disaster. But at that time, I just had no budget. So it was things just like posting to my own social media, like word of mouth, referral programs, in-kind kind of influencer type of stuff where I send them a box and they just kind of review it and they do that for free because they got a free product. And the affiliate marketing. So these are all kind of like cost per acquisition based channels that allow you to work on a budget because you only pay if you get a conversion. And so that's how we went from like 40 to maybe several hundred subscribers in the first year. But that's like seen as relatively slow growth, honestly, because if you launch, a lot of people want you to get to like 10x like every single year, blah, blah, blah type of thing. But in our case, I was actually kind of glad for that because that allowed me to find the product market fit, as you were talking about, because every month was a test. Every month, I would change up the box a little bit. I would improve it this way. I would do this, and then I would like get feedback from the customers, and I would interview them, and I would like get to know it. And so I would say that it probably took us a good year plus to like find the good product market fit. But that was okay because we were like testing it every month. but like testing it in a way that wasn't too burning.
Fascinating. Well, I cannot tell you how much I appreciate your financial discipline as you're building the company, even though you're humbly saying, well, I wasn't a finance professional, but I think you took an incredibly disciplined and informed approach in building the company. So I only have about 1,000 more questions, but I'm going to leave it up to the audience members. So please raise your hand. I'll point at you, and then start from here. So.
Thank you, sir. Since you are selling food, how do you manage safety, and what about regulation? I mean, if you're exporting to 100 countries, I'm sure each and every country has its own safety standards. So how do you manage that?
Yeah, so that's a question lots of investors have asked me. But it's partially, there's a bit of this almost like loophole, so to speak, and it's because we're not actually exporting, we're importing. We are doing a cross-border direct-to-consumer shipping. So a lot of the kind of onus of the customs or whatever laws is kind of on the customer itself. And so and it's because if we were to export in bulk and then be selling it in stores, then that's kind of an import or resale type of business. But because we're direct shipping to customers, that kind of gets around that a little bit. And on top of that, it's because everything we sell is shelf stable. This is not, there's no fresh beef or fresh fruit or something. Everything is in a CPG format, and that also is okay to like ship things like that. Having said that, some countries like EU are getting more and more strict about, well, I know it's not a country, but you know what I mean. Getting more strict about a lot of the import rules, and so we do have to apply for some permits and clear it in advance and things like that nowadays. But at that time, it was not as high scrutiny at that.
Great. Next question. Yeah, there.
I have a question about.
Okay, hang on. I'm going to pass the microphone so everyone can hear your question.
My question is, how did you validate your idea, and what are the advice that you would give to people who wanted to start a business but not sure if the idea is feasible?
Great question. And the reason I validated the way I did was because in the previous startups I had, as I had mentioned, I did like a couple of different ideas with the ex-co-founder. We didn't validate our idea early enough. Like we just did a couple surveys. We're like, oh, people want this product. And we just started building the product for like 6 months. And then when we came closer to launch, we were like, oh crap, like nobody wants this. So definitely don't do that. And there's the whole concept of the MVP, which is the minimally viable product. Figure out what that is for your idea. It could be super bare bones. And in this case, it was me going to like a paper store in New York, buying like paper boxes, and then like putting a sticker of my logo at that time and just hand packing it and then tying a ribbon around it and shipping that out. So it didn't look that pretty. It doesn't look like what it is now. There was no like lots of these awesome assets, but it at least allowed me to just get things out the door and then interview those customers to find out what they liked, what they didn't like, what could be improved on. And that's kind of how I validated it. Whereas like, and another thing that was validating for me was, like I mentioned, every month we kept growing. And that helped me see that there was a demand for this and that there was an opportunity to continue this growth.
This idea of iterative prototyping and ensuring you actually take into account data and feedback you get from customers. Fantastic. Next question, please.
Hi, so you said you were not that interested in entrepreneurship in the beginning, but your friend persuaded you into the entrepreneurship. So how did that happen, and why did you decide to stay in the entrepreneurship area?
Oh, interesting. Nobody's ever asked me this before. So it was kind of partially because I was a year and a half into my program at the engineering school studying CS, and he also had this really roundabout path. We both went to Stanford for undergrad. He became a lawyer. He hated it, as most lawyers do. And then he went back to school at Columbia, studied no offense to lawyers in the room, to study computer science. And then he got his master's in CS as well, and he graduated. And so I just thought it was like a good opportunity because we both had a varied background and skill set. And fortunately also for CS people, like entrepreneurship is not a terrible thing. You could always give it a shot for 6 months to a year. And if it doesn't work out, as long as you build something valuable during that time, you can talk about that in your interview, is the way I saw it. And on top of that, to give a shout out to it, we got into Columbia Startup Lab, which had just started around that time in 2015, 16-ish. So it seemed like a really great opportunity because now there was this network and community and office space. and I was like, why not try it out? And especially because I have a really interesting Columbia story. Like, I don't have a degree from Columbia, but I did a post-bac, and because my co-founder at the time got us into CSL, because you need a degree from Columbia to get into CSL, I got in, and then I stayed, and he left, and now I'm sort of part of the Columbia network, so thank you.
More than happy to welcome you as an honorary member of our community. Please.
I'm just curious how you grew your team and who were the first people that you hired and how did you make that decision and when?
I was actually kind of alone for like 6 months to a year in the beginning of the business, which, if you can tell, because I like to talk, was really tough for me because I was just there, like pinging my friends online to be like, what do you think of this idea? What do you think of this thing? And they were like, we're working, Danny, like, please. But, yeah, so for a while, it was because I couldn't afford to hire anybody. I didn't have budget. I wasn't paying myself. I was just living off savings. Thankfully, CSL had super cheap desks at the time, so that made it a lot better. But it was kind of out of necessity that I needed to start hiring. A kind of dirty little secret was the very first people that helped me out were actually all like unpaid interns that got course credit at Columbia and other schools. So thank you for college students needing course credit. And that was really helpful, just to have people to do like some social media work, some design work. But 1 year into it, I definitely needed like a full-time employee. And it was actually a really awesome story. Her name is Mina Okamura, and she actually reached out to me through our customer support email because she had been following me for a year, like online, our company, and she was working at a Japanese bank, and she was super unhappy, once again, as you do at a Japanese bank, and she really wanted to work at something she cared about. And at that time, I grew enough that I had enough budget to hire one person, and she was the first hire because she was a bilingual Japanese woman, and kind of like a kokushijo, if you know that term. She grew up in America and went back to Japan and stuff. And then she helped me a lot more of the sourcing. It just made it a lot faster to have a native Japanese person do all that. And so she was the first. And then the next one after that was a visual designer, because I can do a lot of things, as we talked about, like a little bit of each, but I cannot do design. Like, I cannot do Photoshop for the life of me for some reason. That is a really hard product. But yeah, so those are the two I needed, and it was the three of us for a good like year plus after that. And I did everything else.
This question brought up something I would like to dig it just a little bit deeper, and that is the mental resilience and the cognition load and the stress that's being an entrepreneur, especially if you're a solo founder. So can you share some of the what did you do to be able to survive all the stress and all the anxieties and all the things that are occupying your mind on a daily basis? Because it's a battle, it's an everyday battle.
Yeah. I mean, and certainly it's been, like I said, 7 years now. So the things I've been doing have changed over time. But early on, when it was really lonely, what it really helped, especially as a solo founder, I do have to give a lot of credit to my husband, who at the time was my boyfriend. But like having this more rock there who had a job, and I could get health insurance through him. Thank you, Meta. And things like that was really helpful. So I didn't have to like freak out as much because this country doesn't give you health insurance. And but like, so that was nice to have that stable rock where one person could take the chance and the other didn't. On top of that, it was the fact that I mean, it helped that we were growing. That was actually honestly a big part of why I was able to keep going, was that even though there were tough times, and as a bootstrap founder, there was times when there was like 1 or 2 months of runway, which was really, really scary. But like, because I saw the potential, I can keep going at it and like find different sources of debt financing, which was also scary when I had a personal guarantee on some of them. But like things like that allowed me to take those chances. On top of that, I just love it. Like, I love the fact that the whole journey is like this. You have really high highs, really low lows, but like, I just tell myself that it's gonna turn a corner. Like, having that optimism is really important. Being able to get back up, I think that's what makes a really good founder, because shit just happens sometimes, like this Ukraine war that has screwed us on fuel surcharges so badly, but we gotta find solutions around it. Like, you can't keep giving up, and so that's what we've been doing.
Excellent, thank you. Please.
Thank you. Could you just tell us a little bit more about how you discover the vendors or the sources and how you sort of quickly build a relationship with them? Because, as you say, many of them are century-old families and they don't you know, make instant partnerships. So I'm really curious of how
Okay.
you did that.
That's a good one. Yeah. So there's like a longer story for this. I'll try and keep it somewhat short. In the very beginning, I bought everything retail because I didn't have the volume or the relationships with them, even though I knew who I wanted to work with. It was like going to Tokyo and going to the Depachika, which is the basement kind of food courty fancy area, and buying snacks there because it's all like high quality omiyage souvenir level. And then I would bring it back in my suitcase from Japan to New York and pack it. I only did that one time. Clearly, that's not sustainable as a scalable business. As fun as that is, going through customs with 3 full suitcases of snacks was like freaking me out. I like repeated a story in my head in case they like checked me. It's like, it's for a wedding. It's all gifts for a wedding. But but yeah. But little by little, what we did, especially when I had like the interns or the employee, was we would actually cold email and reach out to these vendors in Japan, but in like perfect Japanese. But having said that, 95% of them like still rejected working with us because the risk was too high, blah, 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 all that stuff. But like little by little, we kind of built up those relationships with them where we had only one maker that we directly worked with and the rest was like retail or wholesale or something. And but then we built up that portfolio of vendors and we built up trust with them. And some were also just, the Japanese term is goen. It's like kind of almost fate or destiny. Like I was at a New York Dasai sake launch party in like 2017 or something. It's one of the sake brands. And I met this guy who works at this company called Newspicks. It's like a Japanese business tech company, a publisher. And he was like, oh, my cousin has a family business that's a candy maker in Kyoto. I'm from Kyoto. Would you like an intro to him? And I was like, yes, Kyoto people are notoriously hard to work with. And they don't trust foreigners at all. And but then he introed, and then they've become one of our longest partners, working for 4 or 5 years. They're called Daimonji Ame Honpo. They're over 100 years old. They make these delicious like hard candies. And so it was like this intro, and the Japanese makers love stuff like that. They love that it's like this fateful, destined kind of meeting, which I like too. I just think it's funny. It's just the go-en thing gets mentioned all the time. And so like things like that over time build up. And we've started having a really good reputation in Japan. Everybody knows we pay on time, we are easy to work with, and best of all now, starting from 2018, we established an entity in Japan, a kabushiki gaisha, is like their version of an Inc. That took forever, by the way. Like, it's not like in America where you can create an LLC in like 2 minutes online. It takes like 5 months to set up a KK, another 5 months after that to actually get a bank account. It's nuts. But that high barrier to entry is what also makes this a competitive moat again. So because we have that KK and we buy everything in yen now, that makes it a lot more trustworthy for them all.
Great, please.
Knowing how, I guess, complicated like company culture in Japan is, and as you were hiring your employees, I know you mentioned you had a ton of like women in leadership positions, which I think is really cool. How are you thinking about like your hires, your company culture? I mean, you were a team of 1, and then 2, then 3, and eventually, yeah.
Yeah, so we currently have around 50 employees at the company now, so it's come a long way. So kind of thank God, because now there's like people working on different things that are specialized in it. It also comes with a lot of HR nightmares I don't have to get into right now as a company scales. But in terms of culture, that's a good question. It's a lot easier to maintain your culture when you're small, because a lot of it stems from the founder and what type of vision they have for the company. As it grows, it does become a little bit tougher to keep that same culture or vibe or whatever it is. But that's important to me and to the company. And so this is something that's very, very big. So for us, some ways is in all of our job postings, we make it very clear. We say like, we are an 80% kind of female, POC, and or LGBTQ plus kind of company. Like, we're pretty diverse in this way. We don't seek it out. I think it actually just comes because people know I'm a diverse founder. And so that really helps because people feel a lot more comfortable working in this space. And it's kind of rippled outwards. And it's been awesome, actually, to have this space where everybody feels safe, they can speak their minds. It also makes for good business because then people give each other feedback. And we've tried to also do that in Japan. It has been tougher, I'm not gonna lie. But because of that, it helps weed out a lot of candidates from the beginning. Like, I don't want like a traditional salary man who can't think outside of the box, who just does what he's told. Like, I'm looking for people that want to join a scrappy startup, learn on their own, be part of a team that thinks differently. It's hard to find them in Japan. No, it's like, it's not a dig or anything. It's just more, most people want to work at large companies for the job security, and startups are seen as risky. But because we have this strong voice and culture, we have around like 9 employees in Japan. They're all fantastic, really smart, really scrappy, really, really hardworking. They're some of my favorite teammates. I don't have favorites though amongst my
Please.
Thanks. Could you speak a little bit towards your decision to bootstrap for so long, and then what made you decide to raise equity at the point you did?
So as I mentioned before, fortunately, this is a business that you can bootstrap. But to be honest, one of the reasons I bootstrapped for so long was because I had to. Like even in year 2, I already started trying to talk to some early angel investors, you know, trying to see what the appetite was out there. And this was like 2017 or so. And every time I had a conversation with any of them, they just kind of like laughed. They just saw this as such a small niche business. I've had people say to me like, oh, like what, you're gonna get to like 1,000 subscribers? And I was like, you think there's only 1,000 people that like Japanese snacks? Like what the hell, that's so offensive. And it's because the VC investing world is usually all straight white men that see things in their own bubble. So I have plenty of also female founder friends that have had a hard time raising any of their products because a lot of times the investors don't see how it's relevant to them. And that's a big thing that everybody's fighting every day if you're an underrepresented founder. And in my case, that was the same case where I like talked to a bunch, they were just like, oh yeah, whatever. And then I 10x the next year. They're like, oh yeah, we should have invested last year, but it's too late now, you're not gonna grow anymore. And then I do it again. And then I'm just like, can you take me seriously already? And so that's one of the reasons I bootstrapped for so long, was because I just couldn't. It ended up working out kind of well in the long run because I'm not as diluted. But, and the reason I raised the Series A was partially, because I get asked this a lot, like, oh, if you're profitable, if you're doing well, if you're growing, like, why do you need a fundraise? Why give up a board seat? And for me, it was all about de-risking the whole business. Because at that point, I put in my own money. I had like owned most of it. It was very scary. Even if you have profitability now, you never know what happens in the future. Also, I wanted to accelerate the growth and also be a lot more sustainable. We had only 12 employees at the beginning of last year across both Tokyo and New York. And that's like, we are working like crazy, and you can't do that for years. And so I fundraised when our numbers were good, the markets were strong, lots of dry powder, and then got a great valuation that I was looking, and good partner, because also I can sort of pick and choose because our numbers were strong. I was able to fundraise from a position of strength. And the way I thought about it was if I didn't fundraise, if I got no term sheets, I'll just run the business profitably. But because I got one from one I liked, they're called Valor Siren Ventures. They're a lead investor in Misfits Market, GoPuff, Little Spinner Spot and Tango, if you know these companies. And thank God I did, because earlier this year, the markets turned dramatically, right? From, like I mentioned, like thinning margins to the recession to other things. We started burning again. And that would have happened regardless of fundraising or not. And so now we have a war chest to like get through the next few years if we need to.
Thanks.
Please. Oh, you have a microphone coming. Here you go.
So my question is, because currently the macro environment is not really great, and maybe people are trying to cut their expenses, and I feel like snack box, especially prescription, is not a necessity product. So in the future, how are you thinking about like continue growing your customer base?
Ooh, real questions. Nice. Real hard-hitting business questions. So you're correct. I mean, this year has been a little bit tough. People have pulled back on some of their spend, they're spending in different places. Like people are spending on travel and experiences and dining out, and less on like buying things online, shipping to their homes, unless it's like a necessity of some sort. So that's one of the reasons why I fundraised, was that I wanted to expand our different product lines. So I mentioned only 2 of the product lines so far, Bokksu Snack Box, Bokksu Boutique. Early this year, we launched Bokksu Market, which is it's basically the Asian version of Thrive Market. It's an online Asian grocery store shipping nationwide, because those are necessities. Those are like everyday, like sauces, pantries, snacks, foods, things like that. And it's to help be counter-cyclical to the whole kind of process, because the snack box is somewhat seasonal. People generally buy it in the colder months and holiday season as like a gift for a lot of people. So then we launched a third business because 2 is not enough for me, to then do this thing called Bokksu Market. And we also have like 3 other businesses in the pipeline that we're looking to launch to kind of diversify, so that if something goes down a little bit, we can put emphasis in growing something else. And with the snack box, we do still forecast growth for the next year, but more tepid right now, maybe 5 or 10% or something, and then focus our energies on other things. One of the big initiatives we're working right now is to get some of our products into retail. So like there's a big shift from D2C, which means direct consumer, to retail, because retail is a big resurgence. And so we're working on working with our makers to private label / exclusively brand some of our best-selling products and get that into retail stores throughout the country.
US is your largest market, am I right?
Yeah, so even though we ship all over, the US is maybe roughly 80% of our revenue. It's a big part just because the US is everybody's largest market. We have a large population, we spend a lot, we buy stuff a lot in America, and there's just an appetite for trying new things in this country.
But hopefully your cost base being in yen and your customers being in dollars, hopefully that would work in your advantage in this coming year.
Yeah, that's been one of the things that's helped protect us a tiny bit. Unfortunately, the fuel surcharges are much more than the weak yen. But yeah, the 150 yen is insane. Like I started this business when the yen was at maybe 105 or 110, and to have it come down to 150 is kind of amazing. Not gonna lie, I want this to continue forever.
Hopefully not at the expense of world collapse. Any other questions from audience? There you go. Thank you.
Thank you for your time. Kind of going back to what you were saying about the VC space and working with funders. Now that you're going forward and more attractive to funders, what are some perspectives as someone who wants to go into funding that you wish funders considered or makes certain funding partnerships more attractive than others?
Can you repeat the question?
Oh, so like basically when you're when you're considering funding partnerships, what are some things that make some partnerships more attractive and some working relationships
Like
more
how do I
attractive?
choose my investors and stuff?
Yeah.
Is that what you mean? Oh, okay. So I mean, everybody's different in what they're looking for. And for me, I wanted to find like a lead investor that believed in my mission and what I wanted to do and wasn't going to just like veer me off into something different. A good example is some early investors. Most investors have never operated, so they think they know what they're doing because they just like put a lot of money in places, but they don't really. And so some early investors were like, oh, you did this like Japanese snack subscription box really well. You should replicate this and create like a Korean snack box and an Israeli snack box. And I was like, that's not the same thing. And our whole thing is that we deep dived into Japan. Our whole supply chain is there. We can't just easily replicate that in another country. I'm also not passionate about Israeli snacks, so I'm not exactly sure. I'm sure it's delicious. But like, you know, like you built a brand, you built some type of kind of focus, right? And so it's important to know how to listen and what not to listen to and take with a grain of salt. But I was looking for a lead investor in my Series A that believed in what we were trying to build in the future, as well as was founder first. Most investors, their customers are actually their LPs, because they're the ones that give them the money and because they fundraise as well. It goes deep. It's like everybody fundraises. It's crazy. And but I specifically was looking for one that wasn't just lip service, that they really were trying to support the founder, like believed in them and like gave them resources. And that's who I think I found with Valor Sign Ventures. They're awesome. I love them a lot. Who says that about their VC?
Any advice you can share in regard to the actual pitch and what works best for a company like yours?
Yeah, it's so I was actually quite nervous when I first started the fundraising process because there wasn't a lot of founders that looked like me out there that had like raised such big rounds. And like I'd only of course heard about and read about the stories of like Adam Newman and WeWork, and he's just like so charismatic and such the FOMO guy, and he's so tall and like all that stuff. And I was like, how is this gonna compare? Like usually Asians are a little bit more humble and all that stuff. And what I had to do was kind of reframe my whole pitch. Because if I tried to be that guy, the FOMO guy, it would come off kind of inauthentic. But for me, I had a lot of like confidence and faith in my numbers and my data. Like this was really strong. This is legitimately a really good company. And so I went into these calls with that type of mindset. Like I don't need to brag about this. The numbers kind of speak for themselves. I'm going to tell you my passion and my story for this, and then I show you the numbers. And that ended up working out, resonating really well with a lot of investors. There's become this shift into investing more into kind of founder-led companies where founders are willing to speak out, have thought leadership, and that's becoming more and more, especially for a consumer company, a big thing. And so that's kind of what I went as my pitch is doing.
Fantastic. Well, once again, I'm going to abuse my privilege, ask the very last question before the raffle. And that is, we have a lot of students in the audience who have entrepreneurial aspirations, and I hope they've been inspired by your story of all aspects, the bootstrapping and overcoming so many difficulties and the ups and downs. If you were to encapsulate all the lessons learned throughout your entrepreneurial journey into one short paragraph or a few sentences, what would it be? What would you want to impart on the students or on the future entrepreneurs in class that you feel captures the true essence of your journey?
So everybody's going to make mistakes. Don't beat yourself over it. And actually, most of the mistakes you make are not going to be the end of the world. There are plenty of times during my whole journey where I was like, oh my God, this like kind of snack tasted so bad, it made it into the box, everybody's gonna hate it, it's gonna everybody's gonna turn and cancel their subscriptions. Like a lot of these problems are not as big as you think. And so it's about having the resiliency we talked about before, like being able to, if some issue happens, address it correctly, like kind of figure it out, learn from it, and then just don't do it again. We made plenty of mistakes, especially when COVID first hit, because it was so novel, everything. Like shipping was novel, everything was delayed, everything took forever. So I sent out multiple letters from the founder to the whole customer base, explaining and being real about the delays and what was going on. And customers actually resonated with that really well. And so it's about being kind of transparent about what you're doing. And you're gonna find that people are gonna wanna support you if you kind of put yourself out there. That's what I found, is that even though, yes, we're online and it's a direct consumer business and product, this is still very much a people business. Not only your customers, but vendors, partners, and the more that you can make them like you, honestly, the more likely you are to succeed as a business, because people always wanna help founders that they like.